Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for our monthly Nordic equity markets update and options strategy to trade those key themes is Tony Zhang, chief options strategist at OptionsPlay. Tony, it's great to see you. Welcome back to Trade Talks.
Thank you so much for having me. Great to be back.
All right, Tony, as always, let's review the four key markets in the Nordic region.
Yeah, so if we start off by looking at the Stockholm OMX S30, this is really the premier index here in the Nordics. And we've actually recently seen some pretty significant gains here. The OMX S30 has largely been sideways for the last month and a half, but we started to see a breakout here above that 1800 level here. And this is really one of the opportunities that we're currently seeing in the markets, because there is a bit of bifurcation that we've already seen in this market. But actually, if we look at some of the indices, we think that this is actually going to continue and get worse, with Sweden being one of the markets that's actually going to be benefiting from the equity markets. When we look at the Copenhagen exchange, this is really the exchange that has been leading the Nordic markets for the past few weeks, or rather past few months. Almost like the Nasdaq 100 index versus the S&P, where the Copenhagen 25 index, almost like that Nasdaq 100 index, well above the February highs. But what we started to see here over the past few weeks develop is the fact that as the index continues to make new highs, the momentum on that has continued to slow down. So we're seeing a divergence between the price action and momentum. And this is really where we see some of the risks of pullbacks, similar to what we saw in Nasdaq over the past couple of weeks. When we look at Helsinki, this is another one of the equity markets that was trading sideways for quite some time, that is starting to see quite a bit of strength here. So the Helsinki index recently breaking out higher after above the 4,300 level here on the index. So Helsinki looking fairly strong. And then lastly, Oslo. This is by far the weakest market out of the four, and continues to be weak. Is the only one that is still trading below its December 2018 lows, trading below the 200-day moving average, and really struggling to find any ground and losing ground on a relative basis to the other three Nordic markets.
Tony, before we get into Sweden's recovery, I want to ask you a question about Copenhagen and how it has been the emerging leader, like the Nasdaq 100 here in the States. Is it a technology-heavy index? What industries is it weighted to?
Yeah, so it's definitely technology heavy, and it also doesn't have as many financials as the Swedish markets does, which has largely been dragging down the Swedish indices, but definitely more of that technology and biotech weight as well, which is what's been driving a lot of the gains in Copenhagen versus Sweden.
Got it. Okay, so similar to the Nasdaq 100. So let's take a look at the next chart here. You're taking a little bit of a deeper dive into Sweden's recovery. What's the data showing you?
Yeah, so this is some of the things that I showed last time, which is the industrial orders out in Sweden. We started to see a little bit of recovery from that over the last month, but Sweden actually continuing that recovery, actually sharply higher here on industrial orders, but Norway continuing to lag behind here. And this is the bifurcation again that I'm talking about, that we're seeing in the Nordic markets play out here, where most of the indices were tracking together, but we're starting to see Norway lag behind, as we saw in that Oslo chart. So we're seeing that in the economic indicators. We're seeing that in the equity markets, reflected in the equity markets. So this is really where we see the opportunities still are going to be concentrated in predominantly the Swedish and the Finnish markets here.
So we have three bullish trades to look at this month in a number of different sectors: asset managers, the industrial space, and housing. Let's take a look at the first one with the asset managers.
Yeah, the asset managers have really been doing well with equity pricing and just assets around the world continuing to rise, with global central banks continuing to ease, and asset managers are raking in the fees. So, INDUC in Sweden, one of the largest asset managers in Sweden, continuing to benefit from this, breaking out recently above that 240 level. And this is really where we want to utilize options to play this breakout, because we do have to take into account the fact that markets are near all-time highs, and we still have to keep in mind the economic and fundamental backdrop of the world that we're in is not necessarily back at normal times. So whenever we take bullish views here in this type of market, we always want to do so in a way where we limit our risk, and options provide us with that ability to leverage our capital, but do so in a way with limited risk. So the strategy that I'm looking out for this particular stock is going out to November, and I'm buying the 240, which is the at the money call, and selling the 260 calls against it, collecting a little premium here paying just 770 crowns for a stock that trades normally about $242 crowns, which is roughly just a little over 3% of the underlying stock price that I'm risking to take this bullish bet that this breakout here on this particular stock continues continue to march on higher.
All right, Tony, your next one, I'm taking a look at the industrial space, which is interesting. We don't hear about that as much in the States, looking at bullish trades in the industrial space.
Yeah, so as I showed you before, the industrial production orders in Sweden particularly strong, and ASSA predominantly in the security space. And we clearly see security and automation as one of the themes post-COVID-19 that's extremely important to pay attention to. And industrial is really one of the sectors that are starting to gain quite a bit of strength here as we start to see some strength rotate out of technology, out of communications into industrials. And ASSA recently just broke out above that 210 level. If you look at the chart, very similar to a lot of the travel stocks, actually, a little bit of a reopening type theme, if you will, to the stock. So recently breaking above that 280 level. So for this stock, similar type trading strategy, I'm going out to November and I'm buying the 210 calls, which are the slightly in the money calls, selling the 230s against it. This cost me about the same thing, about 710 crowns. So this risk about 4% of the underlying stock price in order to take this bullish bet. But this stock is a little bit more volatile than the asset managers. So we do expect that it costs a little bit more, but risking only 4% here is the key. If this trade doesn't work out, if this starts to reverse, like some travel stocks that we have seen reverse fairly quickly, this is the way to protect yourself to the downside by only risking 4%.
And Tony, for the final trade in housing, your first two bullish bets were vertical call spreads. This one, you're buying just a straight call. What's the shift in strategy there?
Yeah, so this comes down to, first of all, what strikes are available for trading, but also just that the breakout here on housing and JM here, which is the largest property developer for residential housing in the Nordics. This is one where I see a lot of relative strength behind it. It's trading at new all-time highs versus the other two were not at all-time highs. This is breaking out to new all-time highs. We've seen a lot of similar price movement in some of the U.S. housing stocks as consumers as consumers think about moving away from the cities and building, housing. So this is really one of the stocks that we think has a lot of upside potential, which is one of the reasons why we're just using a straight call to not cap the upside potential on this particular trade. And the call was actually particularly cheap, which is why we chose to just go with a straight call. Normally we use a debit spread when the calls are a little bit more expensive and we're trying to offset that cost. Here at JM, which is trading at 285 crowns, I was able to buy a call option for just 1,300 crowns, which is a little over 4% of the underlying stock price. In some of the other names, I had to trade a call spread in order to get down to that 4% risk here. So JM recently breaking out above that 280 level. I think there's plenty of upside here. And if I'm only risking about 4%, I'd like to use a straight call and have unlimited upside while only risking 4% here in a name like JM.
All right, Tony, to wrap up, where can Nordic Trade Talks viewers get in touch with you?
Yeah, so a lot of investors are looking at these types of option strategies, and one of the most important things is to know how to look at these strategies and make sure you understand the true risk to reward. So we have a great partnership with Nasdaq and the Nordics where you can get access to OptionsPlay completely free of charge with real-time pricing on stocks and options that you can analyze the same type of strategies that I just showed you, and you can register for a free account at optionsplay.se.
Amazing. Thanks so much, Tony, for joining us.
Thank you so much for having me.
And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.